we want to bring in Peter Schiff, CEO of Euro-Pacific Capital. Now, Peter, I want to start by asking you, are we starting to see a turning point, as Christy pointed out, in the market as we get better data out of the coronavirus deaths? Now, has all the news now been priced, and do we have a bottom now?
Well, I tend to doubt it. Too many people are focused on the pin and ignoring the bubble that the pin pricked. Before the COVID-19 shutdown, the U.S. economy was long overdue for a severe recession, and the U.S. stock market was long overdue for a bear market. So I think the COVID virus simply accelerated the onset of both. And so all that's going to happen is that we're going to return to a recession and a bear market. So I would not get excited about this rally. I think we still have a long way to go on the downside. And the economy, I think, is going to be even worse.
Well, Christy, your thoughts. Some people even comparing this not only now to the 2008 recession, but to the Great Depression that we haven't seen in our lifetimes. Christy, your thoughts.
Yes, I agree with Peter on that this is not the end now. This is not the real bounce, and we still have a long way to fall because, as we previously stated, the earnings have a long way to fall. We still have massive unemployment tail from this entire coronavirus epidemic, and we're nowhere near the bottom. Right now, the S&P just merely reached the previous resistance level of 2,600. So right now, it's been proven that we bounce back from 2,600 as it tries to attempt to regain support level at 24 and establish a long-term bottom.
This really has been a roller coaster in the past couple of weeks. One day it's down, the next it's up. I mean, and I'm sure there's more to come, as you both have said. Now, Peter, on Friday, the PPP program that President Trump signed into law, it was gradually rolled out. What has been the response to this matter?
Well, I mean, as you would expect, a lot of people are trying to line up for whatever free money the government is handing out. But of course, it's not free. There is going to be a heavy price to be paid in terms of the loss of purchasing power of the U.S. dollar as prices respond to all the new money being created by going up. Plus, of course, these programs are doing far more harm than good. I mean, I don't even think they're doing any good. But what they are doing is they are exacerbating the downturn, and they are going to push the recovery off even further into the future because the government is basically encouraging businesses that should be downsizing and kind of adjusting their cost structure to the new reality. Instead, the government is encouraging them to hold on to employees that they would be better off letting go and freeing up to do something else. Instead, they're going to keep some employees entrenched in companies that are probably going to end up failing because they refuse to lay off people. And so instead, they're going to have to lay off even more people later. And I think a lot of these loans are never going to be repaid because even the people that don't fire their workers, a lot of these businesses are going to go out of business because they didn't fire their workers, and then everybody's going to be out of a job, and the government's not going to get any money back because the loans have no security and there's no personal guarantee.
Well, and that's been a big issue here, also the repayment of these loans and whether or not these companies, like you said, will actually be able to pay that for them, especially with the rehiring of these employees without letting them go. Christy, I want to ask you, Fed's board has said that this basically jobs will come back and that the markets will come back as well as soon as the coronavirus ends. There's no timeline set to that. Will these jobs even come back?
Well, it is likely that the jobs will eventually come back, but as we said previously, we don't expect this V-shaped recovery as so many analysts are so optimistic about, simply because there is such a long tail with the coronavirus, and we have to back and forth between a very heavy supply shock, which we've seen in China already, and then we couple that with a demand shock right now from lack of consumption. If people don't have jobs, they don't have personal income, that they don't have disposable income to then spend on consumption and services, etc. So it becomes a very strong back and forth balancing between the two, and so that makes the tail of the entire coronavirus episode very, very long and lasting.
Long-lasting indeed, as you said earlier, that China could be seeing a repeat of a second cycle, which is something that Dr. Fauci has said time and time again and warned the United States and the world of. But Peter, I want to talk about gold. It's up over 3% today, while equities are soaring. Now, usually interesting because investors are either risk on or risk off. But today looks like to be a risk on type of day. Investors are buying equities and they're offering up some bonds. But why is gold still up?
Well, I think the risk is inflation. The only thing that's propping up the stock market is the Fed and other central banks printing money, which is creating inflation. So you don't have earnings going for the stock market. All you have is all the cheap money that's being created. And inflation is much better for gold than it is for the stock market. And so that's why both stocks and gold are going up. But I think eventually gold is going to be going up much more than the stock market. And I think gold is going to be going up even as the stock market rolls over and goes down. So I think in terms of gold, stock prices are going to continue to fall. In fact, they're going to fall precipitously regardless of what happens to nominal stock prices because of the massive inflation being unleashed by the Fed and other central banks.
Well, Christy, we have about a minute left, but I do want to get this last question in. Things are looking better today, but will we be getting another relief bill? It may even take months before people get their checks. Are you thinking there will be a second?
Well, right now it looks like good news is bad news because the entire narrative is that you don't want the data to be too good because then you risk losing out on this fourth stimulus package, because right now we have this kind of wait and see mentality. However, Pelosi is heavily pushing for a fourth stimulus package to come in as early as this month in April. However, we need to figure out the strength of the unemployment benefits and the second round of direct payments that could potentially be offered up to assist these small businesses, as a lot of them have been excluded from the first round, such as the Postal Service, such as farmers. And this also comes as a record number of Americans last week just filed for unemployment, 6.6 million. And that's a huge number that we now have to deal with. So there is potentially a fourth stimulus package, but it may not be as robust as we've seen.
And it's a record-breaking number that we're seeing of unemployment. Hopefully we can come up with some sort of solution before it's too late. Peter Schiff, CEO of Euro Pacific Capital, and Boom Bust co-host Christy I, thank you for your time.